Welcome everyone, another Financial 15. Kevin and I are ready to go. Lots of great information. Today we're looking at guideposts, signs you could look at that you're on track for your retirement. Lots of great information. You definitely want to stick around.
Yeah, more and more, all the questions we get nowadays are, okay, can I retire? When can I retire? What can I do with my retirement? Am I on track for my retirement? So these questions, we're going to try and answer some of them today. And again, if you want to find out this Financial 15 or any of the other ones we've done this and are back and forth, please go to our YouTube channel and subscribe. Really quick and simple. Click on the buttons, you're there. Or if you can, like us on Facebook. And most importantly, please visit our website at beckerorr.com. We've got lots of blogs there. We've got events that are posted. We've got YouTube videos, the whole 9 yards. You'll love everything there. But today what we're dealing with is 4 signs to prove that you are on track for your retirement. We've done, holes that you haven't had in there, things that you should be looking for. But today, things that you should look for. If you're doing them, chances are you're going to be fine when you hit that retirement phase. Clint, what is the first sign that we want to talk about that you're on track for retirement?
Yeah, these are really signs for any financial goal. What are you doing in retirement? Because that's a very common question we receive. But if you're trying to save for a house or save for a car, you can also look for these 4 signs to make sure you're on track with that objective. But for retirement, number 1 on the list, you need to understand your cash flow, Kevin. Where does the money go every month? How much is coming in? How much is coming out? How much do you need to enjoy lifestyle? Because if you only need $3,000 a month for retirement, that's a very different retirement plan than if you need $10,000 a month for retirement. So understanding the budget is a very important first step.
Yeah, and I mean, that's a big factor that I think a lot of people may not take into consideration. If you have a paycheck coming in all the time and you're paying this and you're paying that and you're not really keeping track of where the money is, that's great when you're working and you don't have to worry about it. But if you hit that retirement phase, all of a sudden that working income isn't there anymore. You need to know where your cash flow is coming from, and are you going to be able to maintain your lifestyle based on that cash flow? So this is a very important one. We recommend budgeting all the time to people. Not that everybody does it, but it is an important factor. If you get into it early, you're going to be fine when you hit that retirement time frame.
Absolutely. So that's number 1. Number 2, you have to spend less than you make, or in other words, you have to save money, right? Retirement, unfortunately, won't pay for itself. Yep. You're going to have to be putting some money aside. So that's very important. We'll go through some data here so you get an idea what other Canadians are doing, and you can kind of benchmark from what you're doing. We'll provide a guidepost, but unfortunately, not many folks are doing this according to the data. This is from Statistics Canada. Less than 5% of Canadians, or pardon me, no, Canadians are saving less than 5% of what they make. So if you earn $100,000, that means they're saving less than $5,000 per year. And I'll pull up some other data here that you can walk us through, Kevin. But unfortunately, this particular item is not followed as well by many Canadians. And you can see more data here by age from Statistics Canada.
Yeah, as we can see, I mean, and this refers to the economic family. So as it mentions, a group of 2 people or more living in the same house and they're related. So as you can see, I mean, the retirement savings, they're just break down by age. As you get older, of course, more retirement savings, you're probably earning more. You may have less expenses and everything else you can go. But still, those numbers, when you look at it, sort of under 35, 90,000 of retirement savings. And then when you add in the total savings, that'll be some other options we'll talk about in a minute. You get to 133. And by the time you're at 55, now all of a sudden 645 and 809,000. Now, depending on what your retirement style will be, that may or may not be enough to supply what you want to do. You got to look at where you're saving the money and what is your plans when you get there. Are you living for the moment today and not worrying about that? These are things, though, that you should take into consideration.
Yeah, and I'll quickly add to that there. So what is retirement savings? According to Statistics Canada, it's really your RSPs, your RIFs, your LEARs, all the acronyms in the financial world probably fall into retirement savings. Also, if you have an employer pension, so you put some money away, they match it, that would be in there. Important to note, this is not a net worth statement, so real estate or any fixed asset for that matter is not included here. Also, defined benefit pensions, there's not many of those in Canada, but that's also not included here. So this is really just liquid assets. And then the total savings, well, if you're saving money in the bank account for a house, for a car purchase, for an emergency fund, all those kind of things, you get lumped into the total category. It's not for retirement, but it is savings, so they'd be lumped into the total category, and they stripped out the retirement numbers. This is for economic families, so that would be a household. And if you had a single individual, you can see the numbers also listed here, Kevin, by age. It does increase with age, kind of peaks in that 55, 64 level there, and then 65 plus, understandably, people are probably spending some of those savings in the retirement years. But the numbers listed there as well. And if you wanted to give someone a benchmark, saying, all right, you're saying one of the signs is I have to save towards my goal, the goal being retirement. Well, how much do you have to save? You really should have a full financial plan that kind of plans all that out for you, because everyone is different. But as a very rough guide, if you're putting 15 to 25% of your gross income away, so if you have 100 grand a year, you're saving 15 to 25,000. You're probably on track. If you're somewhere in that range, you're going to be much higher than the average Canadian, and you're likely on track for retirement if that is the case. Would you agree?
I would. And I mean, again, what you want to do is start saving for your retirement, because as we've mentioned beforehand, we were showing the debt numbers and anything else along those lines. We're not governments. We can't live with that as a consistency and keep that debt going forward. You have to make sure that you're putting money away. Otherwise, you won't be able to supply yourself going on when you hit that retirement age. And yeah, 15 to 25% seems like a fair amount, but by the same token, this is your income source when you're in retirement. You're going to need to utilize a lot of that going forward. And again, as Clint mentioned, this is not just cash savings. This can count if you have a pension plan, if you put money away in RSPs and things like that. So it all adds up together, but it's a very good start that you can have to maintaining you being on track for retirement.
Absolutely. And you already mentioned one item there being debt, and that's really number 3 here on my list, that you're on track for retirement. And that is if you have minimal debt. So if you have a lot of debt, it's going to be pretty hard to retire. We actually did a whole video talking about whether or not you have to be debt-free to retire. We'll link to that video. But one of the signs, one of the goalposts as you're moving towards retirement is reducing that debt burden. The same idea here. We'll give you a little bit of data that you can earmark to see how you're doing in terms of debt. This comes from Equifax Canada, Kevin. It looks at the non-mortgage debt. So this is not real estate debt. This isn't your mortgage. This could be a credit card, could be a line of credit. Walk us through the numbers here. What are your thoughts?
Yeah, I mean, it could be, a variety of different things. You could have a car loan, whatever the case may be. But as we know, like in the early years, at least nowadays, a lot of the 18 to 25-year-old, you may be still living at home. You may be going to school and stuff. So you're probably not accumulating a lot of debt as it goes that way. But as you start to get out into the real world and, you're looking at a new car, you're looking at buying a few things, furnishing an apartment or whatever the case may be, that debt tends to go up. And again, it's so that you can supply yourself with some of the things you want. But as we see, sort of hits that peak between 46 and 55. And then after that point, we're starting to see that average non-mortgage debt go down. And that's a positive. I mean, the last thing you want to do, as Clint says, is have a whole bunch of debt sitting on the books when you want to hit retirement, because trying to pay that off if you don't have that same income stream, it's going to be a hard scenario to be able to accomplish.
Yeah, and this is the non-mortgage debt. We'll look quickly at the mortgage debt. This one is not broken down by age.
No.
A 50-year-old in Manitoba and a 50-year-old in Ontario have completely different debt loads because of the housing prices. You can see it broken down by province, and it's a couple $100 grand. But keep in mind, this is an average. So there will be folks that have $1 million in debt and some that are debt-free. And you can see in provinces like Ontario or in BC, it's about $500,000 as an average for the mortgage by in those particular provinces. And then the last bit here, Kevin, this kind of gets at the crux of the matter for retirement. This is from Statistics Canada, done in 2019. It gives you an idea of how many Canadian families are debt-free by their age. Now, it doesn't mean they're retired, but usually when you're in that 65 plus category, you're at least considering retirement, and you can see the different figures there, right, Kevin? It's maybe not as high as some might think.
No, again, and I mean, a lot of people, you assume that as you get to that 55 plus stage that, you've covered the kids, they're out of the house, you've done the high school or the college thing, depending on what's going on, then you're basically saving money from there. You've paid off all your debt and you're ready to go. But as we can see there, I mean, the under 35s and the 55 to 65 are basically the same thing. 1 in 4 only is debt free. And that can be a scary concept going forward. I mean, once you get to the 65 plus, it's nice to see that 60% of Canadians almost are debt free and not having to worry about it. But again, you got to make sure that you're looking at what kind of debt you're carrying, because in an environment like this where interest rates have been rising, that can be a real burden on making sure that you have the retirement dollars you need when you need to be there at that time frame when you're leaving your job and getting into the retirement field. So again, it is something to make sure that you're maintaining and concerned with. But again, make sure that you're looking at that debt as a big factor. The more you get paid off, the more you're going to be on track for your retirement.
Yeah, everyone's going to have a different retirement plan, but I agree, minimal debt. This is the third sign here where we're suggesting to see if you're on track for retirement. If you wanted a rule of thumb, ideally your non-mortgage debt is gone, so you don't want big credit card debt or line of credit debt going into retirement. If you have a bit of a mortgage left, perhaps that's still doable. You could work it into your plan. So ideally completely debt-free, or your non-mortgage debt is completely gone. I think that would be a good goalpost something to shoot for as you're working towards retirement. So we went through 3. The fourth factor here, Kevin, and this might seem self-explanatory, but how do you know you're on track for retirement? Well, if you're making goals and you're creating plans to achieve those goals, that's probably a good sign.
Yeah, the Becker Orr mantra is always have a plan. And this is no different. I mean, that's the easiest way to deal with it. Too many people, I think, all of a sudden sit there with that. We're in our late 50s, early 60s, and, here, we're going to retire. Well, have you set out what your goals are? Do you know what you want to do in retirement? Have you planned how you're going to occupy your days? A lot of people don't have that aspect there. If you start that planning process and that goal process early, you will get a much better idea as to how to get on track for your retirement. Doing it, a year or two ahead of time, it's not bad, but the earlier you plan, the better off your goals are going to be, and you can get everything orchestrated. So maybe you retire earlier than you planned and things along those lines. So yes, goals, plan, use the have a plan scenario, and keep that retirement on track.
So we went through 4 there that we think would be good goalposts in terms of how to measure your success and to get some confidence that you are in fact on track for retirement. You could really use this for any financial objective. Let's say you wanted to save to buy a house or to buy a cottage. Well, if you understand your budget, you're saving money, you're minimizing your debt, and you're setting forth goals and objectives, well, you'll probably get there. It's probably a good sign you'll be on the right track to achieve that. So if you do want to achieve your goals or help with any questions in the financial world, more than happy to help out. You can see it at the bottom of the screen there, chatwithclintonandkevin.com, part of our website. Fill in the form. We'd absolutely love to hear from you. Any parting comments for the folks, Kevin?
I think we've covered everything for the tracks for retirement now. We'll be back with more later in the next Financial 15, and hopefully you show up and be around.
Take care.